Okay, let me make sure everything good over here with this live. I haven't went live in YouTube in a long time, but just making sure everything's working properly. The other day I had a few errors going on when I tried to go ahead and do this for you guys, but looks like everything is working properly now. Looks like everything looks good. Make sure when you come in, put some likes on the video so that other people will be able to see this information as well. I'm going to be dropping some information with you guys in regards to, hey, how you doing? I see we got a few people in the chat. We're going to be dropping some information that's very important in regards to building credit. A lot of people do it the wrong way, and it's important that you know how to do it the right way, especially if you want to accomplish whatever your goal is, getting a house, getting a car. So this information is very important, not just to you, but there are other people out there who also are making the same mistakes you might be making. They may have heard the same misinformation that you heard. So again, while you're in here, make sure you drop some likes just to make sure that YouTube shows this video to other people so that other people can get this good information as well as you, because I know you guys are going to enjoy this and you're going to appreciate it. Okay, you're welcome, T-Lady. Thank you for joining me on my first live in quite some time. And we are going to go ahead and get started. And I want to thank you guys too. I want to thank you guys for being here on the live stream tonight, especially with all this election stuff going on. I know a lot of you guys are on edge trying to see who's going to be the president. And, I just thank you guys for taking the time out of your evening to be with me so that you can learn some information about your credit, which of course will be very valid to your financial future and your credit future. So without any further ado, I'm Will Frazier, your credit expert, and I'm here giving tips to help you get your credit back on track, because whatever goes down must come up, as you can see. So we're going to go ahead and we're going to get started with the information in regards to building your credit the right way. So, and getting started with that. And if you guys have any questions, make sure you post your questions in the super chat, and I'll be able to, try to see about answering those questions for you. But just getting started, when it comes to building credit, it's very important the mindset that you have. The mindset that you have is extremely important when it comes to building credit. Do I know about general finance? Good evening from Chicago. Thank you, Tammy, for joining in from Chicago. And you guys, you can post in the comments where you are, tuning in from, just so I could get an idea where you guys are at. And just in case anybody is new, I am a credit repair business owner. Owned one for almost 7 years now. I've been featured on creditcards.com. I have one of the highest rated credit repair companies in Alabama, and everything that I share with you is based off of personal experience and experience from helping my customers with their credit issues and seeing what works and what doesn't work. So you're getting very valid information in that regard. And yes, I did study finance. I have an MBA in finance. I have an undergrad in business. So I do have a background in finance. I worked at Wells Fargo as well for about 3 years. I wasn't doing none of the bad stuff they were doing over there at Wells Fargo, just so y'all know. But yes, I do have a very strong history in finance, dealing with money, dealing with credit, and taking credit applications even myself. So, I do have a good knowledge base on how this stuff works. So, and if you guys haven't seen any of the videos on my channel because you're new, make sure you subscribe to the channel and go and check out some of the videos on there so that you can get some more knowledge like this that I share in those videos. But again, getting back to the cause of this live this evening, telling you guys about building credit and the best ways to do so, to make sure that you don't get denied the next time you go into a lender. And please, again, make sure that you guys put some likes on the video so you too can share this with the community, and we can help other people get this good information that might need it. But in regards to building credit, mindset is extremely important and is usually a major thing that is overlooked. And the thing about mindset that's important, and you may think that it's not very important to be worried about mindset. You just want to get a credit card, use it, get a loan, pay it back, and that's all that you think it's about. But a lot of people, when it comes to the mindset of trying to build credit, they have the consumer spending mindset, and that is usually the same mindset that got yourself or whoever it may be into trouble with your credit in the first place. All right. Hey, D Morris, I see you in here. All right, thank you guys. All right. So yes, back on track. When it comes down to the mindset, it's very important because usually a mindset is what led you to the credit trouble in the first place. So you don't want to have a mindset of, I'm about to, go get this credit card, max it out, and then try to pay it back. And that's how I'm going to build credit. Or I don't want to go get a loan, use that loan for something like buying a whole bunch of new clothes or just buying a TV, and then try to build back the loan. You want to have a mindset of, I'm doing this for the sake of trying to accomplish some type of goal. Most people that come to me, they're trying to get a house. Some people trying to get a car. So you need to have that mindset of, I need to build a good track record with what I'm doing. And that should be my major focus in regards to trying to build up my credit. Focus mindset being, I'm trying to build a strong track record so that when I go to this lender, they can see that not only do I manage credit well, but I pay stuff on time, which everybody knows that you're supposed to do. And of course, your finances, how much money you have coming in your house, plays a part in that too, which is another reason why you don't want to go spending money, credit, aimlessly as soon as you get a hold of it, because depending on your income, that can put you in a deeper hole while you're trying to build credit. Because I do see people that have come to me for working on their credit, and I tell them to get a credit card to try to help build up their credit history. They go and get the credit card, but then they go and max it out. And then when it comes time to try to pay it back, they don't have all of the freed up money that they thought they would have to try to pay it back. And then they end up in worse trouble than they were, beforehand. But all of that, again, is because of mindset and mismanaging the credit that you have obtained to try to build up your credit. That's why mindset is very important when it comes to this. And it's not something that should be overlooked like most people usually do when it comes to building credit. So I'm not the type of person that's just going to tell you, go get this, go get that, and not think about how you need to use it. So that's why I mentioned that first of all before everything else in regards to trying to build credit. And okay, so moving on to the next topic. And thank you guys. I see a lot of you guys are coming in here now. More people coming in later. I know it is later in the evening, so I guess some of you guys are just getting off from what you're doing, from working with the kids, possibly. So I thank you guys again for being here. Everybody's here. Hey, wifey, I see you in there. And back on track. So when it comes to building credit, another thing that is very important, you need to know what type of account you need to be using to build credit. Now, why is it important that you need to know what type of account, and what do I mean by types of accounts? Of course, there are loans and then there are credit cards when it comes to building credit. Those are the two major ways of building credit. I know there are different things nowadays, like Equifax allows you, Experian. They allow you to actually have your utility bills reported on your credit report. And, there are some other things that people use, like getting a cell phone. A lot of people think that paying on a cell phone bill is helping their credit, or paying their rent is helping their credit. A lot of people are unaware that there are some things that you pay on that do not build your credit at all. So, it's important to know that you're not building credit with certain things, so that you don't go into a lender's office or apply for a credit card thinking that you're about to get, approved, and thinking that you've been doing something positive towards your credit. You need to know what accounts you need to be using in order to actually build up that credit score, so that you don't get surprised with a denial, because that hurts everybody's feelings, and I don't want to see you in that position. So that's why I'm letting you know about that. So anytime you're trying to build credit, the only things other than those special situations, but like I mentioned with Experian, they allow you to report a utility bill to try to build up credit. If you apply for any type of loan or any type of credit, so a credit card, a personal loan, some payday loans, well, those little small dollar amount loans, not really a payday loan that you pay off in installments, those are the type of things that will report to your credit. A car loan, a mortgage, using your bank account doesn't qualify. If you try to use your debit card from your bank and hit credit when you're swiping it, that doesn't build credit. I've run across people that thought that was helping them build credit. So, again, these are the things that you just need to know so that you know that you're building it the proper way. So the major thing that you would use in regards to trying to build up credit would either be a credit card or a loan. Now, it's important to know which one is going to be the best one to try to build up your credit score. And in regards to that, the best one to build your credit is a credit card. A lot of people usually end up going and getting loans. Why is that? A lot of people growing up, or just from personal experience in the past when you first started using credit, or just hearing things around, you've heard that credit cards are bad, they're the devil, they're going to put you in debt. You've probably heard a whole bunch of negative things about credit cards, and you've been told to stay away from them, or you messed up with one when you first got one. So, of course, you try to stay away from credit cards because of that. But when it comes to using anything dealing with credit, it is the same thing as using a hammer. It's a tool, basically. So with a hammer, if you're trying to nail something in the wall and you're using a hammer, if you use the hammer the wrong way, recklessly, you can end up hurting yourself, hitting your finger. And that's only because you used it recklessly. You didn't use it the way that you were supposed to use it. Now, when it comes to a credit card, it's the same thing. If you use it the wrong way, it's going to hurt you. But it doesn't have to hurt you if you know the proper way to use it in order to make sure that you are building credit the proper way and not shooting yourself in the foot, basically. So yes, that's why a lot of people do not use credit cards, because they're scared of them. They've heard bad things about them, but honestly, they help your credit way more than anything else that I've seen. And it's really a shame that we usually stay away from them, because we shooting ourselves in the foot and missing out on opportunity to build credit very fast and get large increases by staying away from those credit cards. Now, why is it that most people go to loans? Because everybody knows about loans. You go into your local credit union, they're going to try to offer you a loan if you're trying to build credit, if not a secured credit card. And we'll get into that too. But really, the what it comes down to, as far as what determines that the credit card is better than the loan when it comes to building credit, is basically this. It's the fact that there is a FICO pie chart that most of you guys may have seen, and it shows 5 different areas that affect your credit. And 35% is payment history, 30% is amounts owed or debt. There's a 10% for the new credit. There's 15% for the age of your credit history. And there's also 10% for mix of credit. A lot of people have seen that chart. If you haven't seen that chart, let me know. But I'm pretty sure everybody has probably seen that chart. So the part that's important is that 30% of debt owed, or basically that is what is tied into, if you get a loan, how much the original amount of the loan was versus the balance that you owe on that loan. And when it comes to the credit card, it's basically your credit limit versus the balance, or credit utilization. So the way that the loan and the credit card show up on your credit report in this area is really what determines which one is going to be more beneficial to you or not. So when a loan hits your credit report, it's going to show up as you took a loan out for $1,000. So in the high credit column, it's going to say $1,000, and then in the balance is going to say $1,000. Now, when that loan shows up on your credit report, usually it'll make your score drop. This can be in part because of it being a new account, but mostly I would say because it shows up like a maxed out credit card, 1,000 balance, 1,000 high credit. And high credit can be almost the same as credit limit, is the way that it's reflected, or how it affects your credit score. Because when you get a credit card, if you get approved for a credit card for $1,000, on your credit report, it's going to show up as you have $1,000 credit limit and you have a $0 balance versus the loan, which shows $1,000 balance. So because it shows up that you have money available to you versus money owed to you, that's why it helps your credit a lot more, because it's money available to you and you look like you're doing very well in that debt area or amounts owed area. So that is why. And I've seen people that have not had any type of credit card get approved for a credit card while they're building up. It's their first credit card. And one person I saw got 90 points just from getting that credit card. Now, I usually don't see as many points as that with loans unless a person has never had a loan before, because there are different, reasons for that. But it is more, you usually see more points if the person gets a credit card versus a loan. And then it hits you a lot. It hits you very quickly, like as soon as the credit card hits your credit report. So that's why it's really good. And again, any new people in here, make sure that you go ahead and like the video if you're getting value from this, so that YouTube can share this video with some more people. And I appreciate you being here with me this evening. But continuing on, basically, that's why the credit card is going to help you out more than the loan. Now, there's another factor to these two different things that will affect you later on down the line of having these accounts, which is important to know too, which is why I prefer people to get the credit card versus the loan. With the credit card, it basically will never close unless you have a retail credit card or something like that. After you haven't used them for a certain amount of time, they won't close. But if you've ever heard, whenever you close a credit card, it can hurt your credit score. That's very true. And you can, like the person that did not have a credit card before, if we were to close his credit card that he just, applied for, got on his credit report, and then he ended up getting 90 points. If he would have ended up closing the credit card, more than likely he would have lost the 90 points because that available credit is no longer available to him. So with that being said, whenever you get a loan, it's going to show up that you have $1,000 loan and it has a balance. Once you start paying that balance down, it starts to help you out just like a credit card with a zero balance or a low balance. But the thing about that loan is once you pay it down to zero, that loan closes. And most people don't know, when you pay off a loan, the loan will actually drop your credit score because it closed. And again, you're no longer getting benefit from that area that you were once getting benefit from. And if you've ever paid off a car loan and looked at your credit report, before it showed paid off on your credit report, and looked at your credit report after you paid off the loan, more than likely you will see that your score dropped. Unless, it's a rare situation where something else changed on your credit report at the exact same time that happened, then you may not have seen that. But if nothing else changes and you pay off a loan, usually you will see your score drop the month after, or as soon as that hits your credit report, basically, to show that it was paid off. And most people don't know that because most people don't monitor their credit on a monthly basis. They usually go off the annual reports, and they just see them once a year or once a quarter, something like that if they stagger them. But if you at least look at Credit Karma, you can see what I'm talking about. And that's one of the reasons why it's better to have a credit card, because the credit card will stay open for a longer period of time. And once you pay it off, you don't have to worry about it closing. It's always there. It's always open, and you can go back to it and use it if you need it too. So that's another benefit of having a credit card over the loan. But again, that's what you want to look at when you're trying to pick what type of account you actually want to get when you're building credit. You want to get the one that's going to help you out the quickest and is going to have the best effect to your credit. And I'll look to these questions. I'll look to the questions as soon as I get done, so I could focus on getting through this information. But anytime you have a question on anything, make sure you put in the comments in the super chat so that we can so I can address those for y'all after I get through this information. But where was I at? Oh yeah, another thing that's important when it comes to the credit cards, a lot of people try to avoid the high credit limits on the credit cards. I'm going to tell you that it's always better to have a higher credit limit than it is to have the low credit limits. Now, usually when you're trying to build up your credit, you have a low credit score or you have no credit score, something like that. So when you try to get approved for something, you're more than likely, if you get a secure card or an unsecured one, you're probably going to get a $300 limit, $200, probably no more than a $500 credit limit. Now, why does that matter? So when it comes down to the credit limit, basically they're calculating, as I just mentioned, a percentage. So because you have a low credit limit, it's real easy for the percentage of your credit to get high. So if you have a $300 credit card, secure credit card, it's basically going to be you spending $150 will get you at 50%. You always want to stay under 30% to 10% of your credit limit to make sure that you are maximizing that area of points that you're getting from that area of the account. Now, if you get above that 30%, then your credit score is going to start dropping more dramatically, especially on the credit card, which is why they can put you in trouble if you're not using it properly. But because it can drop you very dramatically, the further you get past 30%, of course, it's easier to get to 30% or 50% on a low limit card. That's why it's better to have a high limit card, because that will make sure that it's a lot easier. You can spend $150 on a $300 card and it can damage your score a little bit. But if you spend $150 on a $5,000 card, it's not going to do anything to you, and it's the same amount of money. So I know most people want to stay away from it because they don't want to get themselves into trouble. But again, that's why I mentioned mindset to you first, because the first thing you got to do is get your mindset right to know, to try to discipline yourself. And no, it's not easy, especially if you're used to just going out there and spending and shopping. But you have to at some point say you have goals to reach, and I'm going to hold myself accountable, and I'm going to make sure that I'm doing what I need to do. So don't be scared by the high credit limits. It's going to help you more than it will hurt you. And it's just a good idea to always try to get high credit limits if you can. And of course, it's hard to get high credit limits when you have low credit, because a lot of places aren't going to give you that much money. But that's also why I do have in the description of this video, I have a few accounts listed that actually work with people with low credit scores to get you approvals. And it also, one of them has a guaranteed $5,000 credit limit, and it's guaranteed approval. So I have stuff like that in the comments if you guys need it, but it's really hard to get that kind of stuff when you have a low credit score as far as a high credit limit. So if you can, it's important to try to get that stuff to make sure you don't shoot yourself in the foot while you're trying to build credit. And so those are some things that you want to look at when you're dealing with the credit card versus the loan. And make sure that you guys are taking notes on this so that you can make sure that you remember this stuff afterwards. But of course, you can come back and watch the video too. So another thing that people are looking at when they're trying to pick what they're going to do as far as building their credit, they're looking at secured versus unsecured and which one should they get. So when it comes down to secured versus unsecured, when it shows up on your credit report, on some accounts, if it is secured, you may see that show up on your credit report. Will it affect your credit score any differently? It will not. It does not matter if you have a secure credit card or not. Both of them will affect your credit score the same way. As far as getting approved for something, they will affect you the same way. So it's not something that you have to worry about. Now, when it comes down to when you need to get one versus the other, if you can get unsecured, always go unsecured first, because unsecured, you don't have to put up a deposit. With the secure card, and if you don't know how that works, with the secure card, you have to put down a deposit. Like for a credit card, if you put down $300 deposit, they'll give you a $300 credit limit. Now, basically, you're not spending that money when you're swiping a card. You're still using it like a regular credit card, but you just have to give the bank a deposit because they don't trust you because of where your score is right now. So just in case you act up and you don't pay them their money, they want to have some security to know that they got some money from you up front for the same amount of money that they're giving to you. So it doesn't really benefit you. It benefits the bank, those secure cards. So if you can get unsecured, it's always better to get unsecured first, because that's what's going to be more beneficial to you and keep money in your pocket. And also, you have to usually close those secured accounts to get your money back once your credit is in good shape. So, of course, if you can avoid having to close the credit card, which will hurt your score, then of course it would be more beneficial for you to try to get the unsecured. And that is why I bring that up too, because that's very important. Now there are some secured cards out there which do graduate their customers, which basically means instead of you having to close it, they will just turn that card into a regular credit card and send you your money back instead of you having to close that credit card out. So those companies are very good to work with if you do need a secured. And secured is only for if you just know you cannot get approved anywhere. And like I said, I have some options for you so that you don't have to go that route. But if you do go that route, that is one thing that you want to do first: unsecured versus secured. Another thing that I'll bring up: where to go in order to try to get approved for accounts. Now, when you're trying to build up credit, I see a lot of people going to credit unions. Credit unions, sometimes the smaller banks, or really more so is either the big bank you're trying to go to or it's the credit union that you're trying to go to. More people usually try to go to the credit union because, of course, you've heard the credit unions work more with people and, they have more understanding of people's situations when you're trying to get approved for credit with them. So, of course, that is something that they do, but there are some downfalls to going to a credit union. And in regards to going to a big bank to try to get some credit, usually if you are in a state where your credit is not very good, the big banks are going to deny you because they have real strict requirements to get approved. So, of course, they're not just going to give out money to anybody. And some of those big banks do have secure card options too. But again, if you can find places to give you unsecured, you always want to do that first. And don't look too much at the relationship that you have with your bank, because a lot of people choose where they go to build credit based off their banking relationship. You need to go to who's going to have the best option and product for you. Don't look at the relationship. You want something that's going to give you a high chance of approval, that's going to do everything that you need the card to do or whatever you're using to build credit. But the reason why I'm saying to not so much go to the credit unions is because of reporting. And when I say reporting, what I mean is credit bureau reporting. So every bank, every loan, every lender, they check a specific credit bureau when it's time for you to apply for credit. If you're trying to get a house, they're going to check all 3 credit bureaus. But you never know what lender, what auto lender, what credit bureau they're going to check when they're trying to approve you for credit. So because of that, it is extremely important that you have all 3. Any credit that you get needs to be hitting all 3 credit bureaus to make sure that it's benefiting all 3 of your credit scores. Sometimes people have one score higher than another because they have an account that doesn't report to all 3 bureaus. So the bureau without that account, that good account, is missing that good information. So the score is suffering. And if you go to a lender that checks that bureau that you don't have the good information reporting, then you're going to think you did a whole bunch of good stuff by using the card properly or building your credit with the loan. And then you go and try to get approved for something. And then you don't know why you got denied because you've been doing all this good stuff, but it's because you were building credit, but it wasn't hitting all of your bureaus, and you went somewhere that checks the bureau that did not have that good information. So credit unions, usually they don't really report to all 3 bureaus, because what you don't realize is that the banks and lenders, they have to pay the bureaus to report information to them. So the smaller the entity, usually the less likely they are to want to pay for all 3 bureaus, and they may pay for 1 or 2. Now there are some credit unions, the bigger credit unions, they may report to all 3, like Navy Federal, different places like that, Max Credit Union. It's a whole bunch of different credit unions out there, but only a few of them actually report to all 3 bureaus. So you want to try to steer to a company that you are going to know is going to report to all 3, so that you don't waste your time, do all that good effort and good work, and then still get denied because you didn't have the information hitting all three bureaus. And no, you cannot go in and convince them to report it to all three bureaus, because unless you're going to pay them, the money they're going to have to pay to the bureaus for everybody, then they're probably not going to do that. So it's just best to find a place that does do this. And this information I'm sharing with you may not be something that a person inside the branch location might know, because I used to work at Wells Fargo, and it was a lot of that stuff that none of us knew. The tellers, the bankers, I was a banker, and I didn't, they didn't teach us all that stuff. I found out this information after I left the bank. So the person that you're talking to inside of a branch or a bank or credit union, they may not know that information. So that's why I'm letting you know, so that you can know to do what's best for you in your credit building journey. So that is an important thing to know in regards to building credit, because you want to make sure that you're killing three birds with one stone. You don't really want to mess yourself up and end up having to go back and get another account that does report to the bureau that was missing, because you got one and not knowing or not thinking about that. So yeah, that is very important when it comes to building credit and whatnot. And that is really the major things that people need to know when it comes to building credit, that they don't necessarily know or look at. So, like I said, I shared those things with you because I do want to make sure that you guys are on the up and up, and that you don't go and get disappointed when you go into a lender, and I try to post videos to try to help you guys with that, but I thought coming on live and doing this would help. And this is also a Q&A, so if you have any questions, like I said, feel free to ask those questions so that I can try to answer them. Because if you don't already have a 750, 780, 800 credit score, I know you have some type of questions about something, especially if you're in here. So please feel free to go ahead and ask whatever questions you have, and I'm gonna go ahead and see what you guys are asking now, so that I can answer those things for you. So my credit was recently repaired, but now I have a thin file. What credit card do I suggest you apply for? Okay, so you have a thin file. So your credit got repaired. I'm guessing a lot of stuff got removed for you to have a thin file. So what I would say is, and just in case you guys don't know what a thin file is also called a young file. It means you don't have a lot of accounts reporting, or you don't have a lot of old accounts reporting. So you don't have a long credit history, or you don't have a lot of credit history. And in that state is a lot. Your credit score is a lot more sensitive, and anything that you do can affect it very drastically, from negative to positive. So if you have something bad happen, it can affect you way more negatively. If you have something good happen, it can affect you way more positively, as far as you getting more points or losing more points. So that's both a good and a bad thing. But I would recommend, it's all going to depend on your score, really. So I don't know, Tammy, if you know what your score is now, and if you don't know what your score is, everyone should be monitoring your credit on a monthly basis. I know people usually don't want to, but credit monitoring is the best way to do that, to get all three. Instead of Credit Karma, and you need to be getting FICO scores, because those FICO scores will help you know where you're going to be at when you get to a lender, because the lenders are using FICO scores and Credit Karma uses Vantage credit score, and the difference can be anywhere from 20 points to like 100 something points I've seen. So you don't want to be surprised by that when you go into a lender. And that's another thing that's important, to make sure you don't get denied. Make sure you're monitoring your credit. If you don't monitor your credit, you don't know where you are. If you're not getting FICO scores and you're using Credit Karma, you don't know where you are. Is at least not very accurately, and you don't have the third credit bureau. All three bureaus do not have the same information on them. Even if an account is reported to all three bureaus by the same company, I've still seen where they may be reporting the balance different on Experian and TransUnion for the same account on the same person's credit report, or they may be reporting the payment amount wrong, the date it was open wrong on different bureaus for the same account. So you always need to see all three bureaus. And sometimes you may have a collection account that's on the bureau that Credit Karma doesn't have, which is Experian, and it could be information on there that you don't even know is out there because you're not even getting to see all the information. So monitor all 3 of your credit reports. I do have a link for an option that you can at least check your credit reports for $1. It's called My Score IQ. It's down in the description as well, where you can see your credit reports for just $1, and it's a 7-day trial. So, and it gives you FICO scores too, so you can get very accurate information, and it's a good option to monitor your credit too. I use it, my customers use it, so it is a good option. Okay, so you around the high fives. So with you being around the high fives, I would recommend one of the ones in the description. Like I said, there are 3 different options in there. I do have a secure card option in there with no credit check, guaranteed approval. I have a unsecured card in there, which does check your credit, but they work with people with lower scores. And I also have an alternative credit option in there. It's more so of a retail card, but that one is really good because it guarantees approval. It gives you a $5,000 limit guaranteed, and it reports to all 3 credit bureaus. All 3 cards report to all 3 bureaus. But if you go to that list, you'll see that I have those options on there. You can pick one of those based on where you're at right now, but the one with the $5,000 limit will be the one that will help your score the most. It's not always the most popular because it's a retail card, so you can only use it at this particular company site, but it is very, very, very beneficial to your credit. So I would go ahead and check those out, and hopefully that helps. Let me see, you got some other questions here. Okay. Okay, go ahead and check that out, Tammy, and let us know how it worked out for you. Let's see what else we got here. Okay, I just explained about Credit Karma. And I'll explain another thing about Credit Karma as well. A lot of people think that Credit Karma is, there for credit reporting, but they're really a marketing site. And what I mean by that is they give you the platform for free so that they can get a whole bunch of users on there, right? But what they do is they market a whole bunch of products to you, and they tell you, you're likely to get approved for this account. And really, they don't know if you're likely to get approved for it at all. But they're telling you you're likely to get approved for it because if you apply for it, whether you get denied or get approved, of course, they get paid for it. And if you get approved for it, they get more than if you get denied, but they're still making a lot of money off of people by telling you that you're likely to get it, because they know, if you hear them telling you, and they're a big company, that, hey, you're likely to get this, you're thinking that you probably can. And I know you're probably trying to build credit if you're on a Credit Karma site. So, they just try to take advantage in that way. But that's just another little piece of information about them. Okay. Have I ever had anyone score drop after they paid a collection? Yes. And I actually posted a video about this not too long ago, going in detail about paying collections. And yes, if you try to pay a collection, it will indeed drop your credit score. Sometimes nothing happens, but usually it drops your credit score. It doesn't matter whether it's $2,000 or whether it's $5. Paying collections does not help your credit scores at all. It's always better to try first to see about a removal on it, and there's a process for that, to do it the proper way, not just by going through Credit Karma or going through the credit bureau's websites. There's a much more detailed effort that you should make. It's not very strenuous, but just sending paper disputes basically, and doing it the proper way. And I also have a class that kind of teaches you what things you may be doing wrong when you're trying to work on your credit, in the description. It's a Fix Your Credit workshop class that I did, and it is free. You can check that out and get some more information on trying to work on and improve your credit. And I actually go over a customer's results that I had, who went from not being able to get a house, having good income, but no good credit. And she was able to get a brand new home in 7 months. And basically, she had tried other methods, other companies, and it took, she spent about 2.5 years wasting her time with that. And then after 7 months, she was able to do it once we, did things the right way for her. So check out that free class so that you can get some of that information and learn, some better ways to work on your credit properly. Okay. Does the Score IQ credit monitoring link show a FICO advantage score. Yep, the My Score IQ, they definitely have a FICO score in there. So it's FICO score 8. There are several different versions of credit scores out there, different versions, industry versions within each version. So like a version for credit cards, a version for car loans, a version for mortgages. So it's a whole bunch of different versions out there. But My Score IQ has FICO 8, which is one of the more recent versions, and it will be more accurate to what you'll probably see going into a lender compared to other options. Okay. Yes, that retail card does show up on all 3 bureaus. Okay, let's see. 726, 715, 708, thin file, Credit Karma with cards available. Just got discovered. What other card? Okay, so if you're in the 700s and you already have one card, sounds like you said you got Discover. I would look into what your scores being, and of course, you said Credit Karma. So if you have 700 scores on Credit Karma, you really want to try to see your FICO scores. I would recommend you try that dollar trial with the FICO score and just to see where your FICO is, because if you're using Credit Karma, and I'm thinking that's what you're saying, that those 700s are on Credit Karma, your score could be very different. As I mentioned, your score could be anywhere from 20 points difference in FICO, or I've seen a person that had a score of like 7 something like that, 720 something on Credit Karma. They went to the car dealership. When they went to the car dealership, they ran the numbers to see where they were at. They were at like a 600. So like 120 something points off on Credit Karma. She went to the dealership ready to buy something, thinking she good to go, and then she had to get turned around because she wasn't looking at an accurate score. And this live right here is all about making sure that you are doing everything that you can do to make sure that you are in the best position to walk into a lender's office or apply for whatever it is and get approved. So you definitely want to make sure that you are checking a FICO score before you go into a lender, because you don't want to get turned around. Yeah, I know it's surprising, isn't it? But a lot of people don't know this information. So again, that's why I'm here sharing it with you guys now. Okay. Do all credit cards show up on all 3 bureaus? No, all credit cards don't show up on all 3 bureaus. It is only usually the bigger banks, Capital One, American Express, Wells Fargo, Bank of America. Those credit cards, they're going to show up on all 3 bureaus. They big banks. They have the money to pay the bureaus to report. So that's what they do. Again, but every card, especially not the credit unions, the smaller banks, those are a lot more iffy. But there are some companies that are mostly online that do have options, which is why I curated a few options for you guys. 3 different options that I put on that link for you guys in the description. Okay. Navy Federal. Yes, Navy Federal Credit Union. They do report to all 3 credit bureaus. They are one of the big credit unions that do. And again, because there are so many different credit unions in every city, every state, I can't really name all of them, but everybody knows Navy Federal, and Navy Federal does report to all 3. Like I said, they are one of the biggest credit unions that are out there. I don't know if they are the biggest, but I know they're one of the biggest credit unions out there. But you would have to find a credit union in your local area that is in multiple locations. More than likely, that would be one of the ones that would report to all 3. You can always try to ask, like maybe the bank manager or something like that, because the tellers and the bankers, they may not know. So you just want to talk to the higher up if the person that you're talking to doesn't know, because a lot of the people on the front lines do not know that information, which they should, because it would be helpful to you guys walking in there thinking that they have all the answers, which not to talk about them or anything like that, because I was in that same position, but we just really aren't taught that information from the banks that we worked at. Okay. Okay. Now you guys play nice in the comments now, but sometimes people miss the questions that are in there. They may not have heard what was going on. They may have came in late. Sometimes they go in and out, and they may not have heard it. But hopefully that information was heard by anybody. Now, anybody that has questions please feel free to ask any other questions that you guys may have. Stream has been going for a good amount of time, but if you guys have any questions, please feel free to ask those questions. And yeah, you can apply at Navy Federal online or call. You just have to be a member to be a part of Navy Federal. You have to be able to get in the door through some type of military affiliation or another member of the bank. You can get in through an affiliation through them. So that's the one bad thing about Navy Federal. You do have to make sure that you have a connection to be able to get in the door with them. But Navy Federal is really good because they are very generous with their credit cards and credit products. So they do kind of help people out that may be in a rough credit state. So, they are definitely a good bank, good credit union to work with when trying to build credit. But, there are, like I said, several different other big banks out there. I think that credit unions, I think Pentagon is another one that's pretty big. And I think they report to all three credit bureaus, but that's just one other option that is out there. And, if you guys want to try to build credit using a loan, like I said, I recommended that credit cards are always better than loans when it comes to building credit. If you are a person with a thin credit file who does not who does not have a loan reporting on your credit report, as in you don't have a car loan or never had a car loan, you don't have any type of loans reporting on your credit, there is a part of your credit that I mentioned, mix of credit, which is 10% of your credit. And that is an important part. And if you need a loan to build credit, I just did a review of a company that has a product that actually helps you build credit through a loan. They don't actually give you the money for a loan. It's like you make payments and they go to a savings, and in that savings, it'll eventually at the end be yours to hold on to and use. So basically, they help you build credit and they help you save money to reach a goal at the same time. They have products for if you just want to build credit as low as $15 a month. If you want to save money and build credit at the same time, say you're trying to save up $1,000 in 12 months or $2,000 in 12 months or 24 months, they have those type of options that will report to all three credit bureaus, and they will put money to the side and save money for you so that you can build up credit and have money saved up for a down payment on a house or a car. And like I said, just a little while ago, I just posted that video, so you guys can make sure that you check out the video. But I do have a link to that company. They're called Credit Strong or Strong Credit. I forgot, but the link to them is in the description of this video. But I posted a video giving you more details on their company and how they work. They even have an option to help you with building up your personal credit to be used for business credit. So, I got two options for you guys. Well, four really. The 3 credit card options in the description if you need help trying to build up your credit, and also that loan, which will help you save money while you're building credit at the same time. So you guys make sure that you check that out. Oh, no problem, Daisy. You're welcome for the information. Like I said, that's what I'm here to do. I'm here to help people. I've seen so many misunderstandings and myths put out there over the years, as far as what people think they're supposed to do or what people don't even know that they should be doing. And I just wanted to try to help people. I try to do this all the time just to make sure that we are definitely helping to uplift each other. I can't talk. Helping to uplift each other so that we can get into better states with our credit, because there are a lot of things out there, wealth building wise and financially, that we are missing out on because we aren't taking care of our credit, because we don't have the right information. And that's what I'm here for, to make sure you guys have the right information so you can take advantage of every opportunity that comes your way when it's time to accomplish your credit goals or your financial goals. And how much is it to do a consultation? Okay, so for a consultation, basically it's $1. That company, My Score IQ, I use them for all of my credit consultations. So I don't charge anybody any money up front to do a credit consultation. You'll basically set up a phone appointment with me. You'll sign up for the My Score IQ. You'll pay them $1, not me, and we'll get access to all 3 of your credit reports, all 3 of your scores, and we'll go over your credit reports and scores during the consultation. I'll tell you exactly what needs to happen to get you from point A to Z, and anything that can't be worked on or anything that you need to do yourself. You'll know everything that you need to do by the time we get off the phone. And if I can help you, of course, I'll let you know how my company can help you get to a better state and accomplish whatever goal you have for your credit. So hopefully that answers that question. Okay. Is it best to keep one credit card at utilization between 1 to 3% while keeping other cards at 0% utilization to keep the credit score up? So in regards to that, I know there's something out there where people say that you should not have a 0 balance on all your cards, that you should at least have something. You're welcome, ma'am. That you should at least have something reporting on your balances. And what I say is this. Okay, thank you for subscribing, and you're welcome. You're welcome. So what I would say is this in regards to that. I don't think that it matters as far as how it affects your score. I don't think that it is a significant enough difference to make sure that you have at least $1, or to be worried about if you have $1 on there, 1 to 3%, or if you have a $0 balance. But what I do tell people to do to make sure that you're also keeping up, payment history as well. Or if you do have retail cards, because they will close you out after 6 months, maybe a year of not using the card. Is different for every retail card. And when I say retail card, it is a credit card, but it's at, Best Buy, Belk, those type of places. You want to make sure that you are at least maybe every 3 months using one card and then paying it off, and then not using it again, for maybe another 3 months. But I didn't go over using the actual credit card. When you're using the credit card, it is a good idea to make sure, well, you have 2 options. Sometimes it is important for a person to not pay a lot of money in interest. And other times it's important for a person to not want to have a balance. So they don't want to have a payment that they're paying on consistently. So if you want to make sure that you don't pay any money in interest, what you need to do is you need to purchase an item. Make sure it's not something large. It could be you spending gas in the month. It could be you going out to eat. It could be you just buying just a little something here and there. Make sure you buy it and pay it off. If you buy it and pay it off, you don't pay any interest. Usually with credit cards, if you pay off the balance within 25 or 30 days, they will not charge you any interest on whatever the balance was. So if you do that, you'll make sure that you never pay interest by buying an item and paying it off. But, if you're trying to build up your payment history, that may not help you as good because you've paid it off and you're not really going to have a payment history until you buy something again and continue to pay. So if you're more so worried about building up a payment history, then that is when you need to buy an item and you need to keep it on there, but pay the minimal payment, but pay a little bit more than the minimal payment. And then that way you don't have to consistently keep buying items and you can just pay off the balance. Now you will pay a little bit of interest on the balance, but you are cutting through some of that interest by paying more than the minimal payment, and you're making sure that you don't have to consistently go out there and buy items on your card. But of course you want to make sure that you're staying under a certain percentage of your credit card balance at all times. You, like I said, you want to at least make sure that you don't go past 30%, but 10% to 30% is ideal, staying under that mark, to make sure that while you are building up credit history, that you're not shooting yourself in the foot with the credit utilization. And one more thing, and I see your question too. I'm gonna get to that in just a second. But when it comes to a person that hasn't had any accounts on their credit report at all, or a person that has had credit in the past, but you haven't made a payment on any type of credit account in over 2 years. So basically a person that stopped using credit a long time ago, or a person that has never used any credit at all. in order for FICO to generate a score for you, you have to have a payment history of 6 months. You may be in this situation that I'm describing, either one of the two, and go to Credit Karma and you may see a credit score. You may go to some credit monitorings and see a credit score. That is because that credit monitoring company or Credit Karma is using a Vantage score, which will give you a credit score even without having 6 months of payment history. But if you are, like I said, in one of those two situations, FICO will not generate a score for you until you have 6 months of payment history. So what does that mean? If you go to a lender, all lenders use FICO. All of them use FICO. So if you try to go to them to get approved for something and you're in one of those two situations, you will get denied because you do not have 6 months of payment history on anything. So they will literally see that you don't have a score. Or they will say they don't have any information when they try to pull your credit. So it is important for you to make sure that you do get a credit card or a loan and pay on it for 6 months, really 7 months, because after you get the account, it may take 30 days for it to hit your credit report. So you need to be paying on it for at least 7 months before you try to apply for something, just to make sure you know that you are actually going to be able to get a score and try to get approved. So let me take a look at that question. How do you start fixing your credit if you are unemployed? Okay, so if you're unemployed, and I'll assume that means you don't have any income coming in at all that you can use. But if you're unemployed, you can start working on your credit. Now, if you try to hire a company, of course, it's going to cost some money out of pocket to hire a company. Usually a company can get it done a little bit faster because they already know what to do. So as long as they're doing the legal thing, they already know what to do so they can get it done for you faster. But you, of course, would have to pay for that just like any other service. But if you're trying to do it yourself, then basically what you have to do is you have to send this, well, you have to get your credit reports, which I know people like to use the annual reports, but the annual reports are not the best thing to use when you're trying to build your credit. And I do have a video on this where I talk about the annual credit reports are no longer free. So go ahead and check out that video. But you need to get your credit reports, but you're going to have to get your credit reports every month. You need to get all 3 of your credit reports because, again, you never know which bureau a lender is going to check. So you have to make sure all 3 are clean. If you get the annual reports, you only get them once a year. They are giving them to you more frequently for a certain period of time because of COVID, but you need to be able to see your scores and they don't give you your scores. You do have to pay extra for your scores. I think one of those annual report bureaus will give you a score for free, but I don't know how long they do that. But you need something that's easy to look at to get all 3 of your credit reports and all 3 of your credit scores to work on your credit, because it is a month after month process. So you need to find a solution for that. Credit Karma isn't going to do it. Annual credit reports isn't the best option for that either. So I usually recommend you get some type of credit monitoring. That way you can get the information that you need every month. You're also going to have to send disputes every month. So of course you're going to have to pay for stamps. You're going to have to pay for envelopes. And, you have to type up letters and send up the letters, because doing the disputes online is not the best option to do it. You may have heard of a person here and there having results, but at being somebody that helps hundreds of people and seeing different scenarios, doing it online will not get you consistent results or not get you a high number of results as far as deletions compared to sending in paper disputes. That is the most effective way to do it. So that is something else that you would have to do on a monthly basis. And of course, you have to know what to say in those disputes and to make sure that you are maximizing your potential to see deletions and whatnot. And even beyond the disputing, you have to know stuff like what I'm telling you, because if you get everything off your credit report and you don't have any accounts showing good credit history, you won't have a credit score, or you'll have a very low credit score. So you have to make sure that you are covering that base as well. And then sometimes there are things that can be deleted or are not likely to be deleted off of a credit report, and you may have to settle some things, but that's usually the last resort. But it's a possibility that may happen. So that is why, you need to have a full understanding of what you're doing on the credit report. You have to see the credit report know what you're looking at, know how to handle everything, and then you have to do disputing on a monthly basis until everything is cleared up. I know that's a lot of information, what I just dispensed right there, and that's just, the surface level of it. But again, I do have a free class that can kind of tell you what you need to do, and I do have a do-it-yourself credit repair course as well, and that would teach you what you need to know in order to actually send the disputes and what to put in the disputes, and I actually have 93 sample dispute letters in there as well. So I have that. I have some free information for you available and some other tools that can help you do the work yourself if you need that help. So hopefully that answers your question, JC. Okay. Do you believe the traditional way of checking your credit history will be taken over by fintech companies checking your banking history? Well, fintech companies have been taking over. They have been, a whole bunch of them have been popping up a lot lately. So, and if you don't know what a fintech company is, those are the companies where they don't necessarily check your credit score, but they do ask you to usually log into your bank account while you're doing the application, and they will look at your banking information, your deposits, your transactions. They look to see if you've been overdrawn, and stuff like that. They just look at the overall history of how your bank account has been flowing, whatnot, to get an idea on how much money you actually have coming in and out, to know if they can trust you with credit or not. And that's how they base their decision versus using the credit score. So I do believe, I don't know if they're going to take over right now, because a lot of the traditional banks are still doing things a certain way, and the big banks have more control over a lot of things in the financial realm. So I don't think that they'll be changing that anytime soon. There was a certain version of credit scores where they were going to start taking your banking account information into account when they're calculating your credit score, and it could either boost you or knock you down. So that kind of thinking is kind of being put into credit scoring itself. So I think that that idea of lending out money to people based on your based on your banking information is probably just something that we're going to see more of in the future, and that will help a lot of people. But unfortunately, it will also hurt a lot of people, because there are some people who they don't manage their money coming in and out very well, but they still have a decent enough credit score to get approved for some stuff. They got the proof of income, but just because you have a lot of income doesn't mean that you're managing your money well, doesn't mean you have a lot of free cash flow. So it can either help, it's going to help some people and it's going to hurt some people. But yeah, we might start seeing a little bit more. Okay, you're welcome. And the free credit course. Okay, in the description, you'll see under the links that I put.
This is the top result.
Oh, my phone listening to me. And the Google Assistant just kicked in. But what was I saying? Oh, so under the links that I have in the description of this video, which will be covering just some tools that I put there for building credit, you'll see that free class. It should say free workshop, free class, something like that, that tells you what you're doing wrong when you're trying to build your credit. When you see that link, that is the one for the free class that'll tell you what people are doing wrong. And make sure you finish that class. It's about 30 minutes, I believe. A lot of good information in there, and it will definitely get you in the right direction. And again, those tools that I have in the description, one is those 3 credit card options that can help you build up your credit. The one loan that will actually help you save while building up credit. And I don't know if I mentioned it, but that one reports to all 3 credit bureaus as well, the loan. And also there's a book that I have linked in the description, and that book is very good too if you're trying to build up credit. I think it's called Approved, and the link is to Amazon, but just go ahead and click that link and it'll take you straight to the book. And that book is really good because the person that wrote this book, I actually met him. He's a great person, but he went through all of the credit card companies, mortgage lenders, well, just about all of them, credit card companies, lenders, for loans, mortgage lenders, and found out their criteria that they look at to approve you, as far as how many inquiries you can have on your credit, what the minimal score needs to be, if they care about any particular things on your credit report, because it's not just about your score, it's also about the items on your credit report. And he went through all of these companies and put all of this information in the book. And it's American Express is in there, Capital One is in there, Citibank is in there, Bank of America, Wells Fargo, and all of their different credit products, and what your credit report literally needs to look like. Of course, because he wrote this book a minute ago, some of the information may be a little bit outdated, but and not a lot of it. But the bank themselves might have changed, some tweaked a few things here and there, but for the most part it's on point. And it will have everything that you need to know to try to get approved, so you can know, okay, does my credit report look like this, and I'm trying to get this American Express card. Okay, I need to do this, boom boom boom. You know what to do. Then you can apply, and it'll it takes the guesswork out of it for you. So that book is also underneath those 2 credit building options, so that you guys can have that. And make sure you just go in there, click those links, and take advantage of the free tools I have. I got a lot of free tools down there for you guys. So make sure you are taking advantage of that information, so that you can try to build up your credit and get to whatever your goals are. I also have these T-shirts. I have some other T-shirts too linked down in there too. So make sure you check that out as well. But, I think I've covered a good bit of information for you guys tonight. Hopefully you guys saw some value in this, and you're able to take this and use this and pass this information on to other people. Make sure you share this live video out once it's posted with other people that may need it on your Facebook, on your whatever your social media of choice is. But thank you guys for joining on tonight. I know y'all could have been doing any other thing else, but y'all were up here learning about your credit, which is very good. But I will see you guys next time. Go ahead and check out some of my videos if you need more information, and reach out to me if you need any help. You guys have a good night, and I'll talk to y'all soon.